Led by inbound tourism and private consumption, Hong Kong's economy continued to recover in the second quarter of this year, though the momentum softened on the back of the strong rebound in the preceding quarter. Real gross domestic product grew by 1.5% year-on-year, while seasonally adjusted real GDP fell by 1.3% on a quarter-to-quarter comparison. Amid weak external demand for goods, total goods exports plunged further by 15.2% year-on-year in real terms in the second quarter. Exports to the mainland, the US and the European Union fell sharply. However, exports of services continued to grow markedly by 22.9%, with exports of travel services jumping over eightfold thanks to a further surge in visitor arrivals. Alongside the continued economic recovery, private consumption expenditure rose notably further by 8.2% year-on-year in real terms in the second quarter. The labour market continued to improve in the quarter, with the seasonally adjusted unemployment rate declining further from 3.1% in the first quarter to 2.9% in the second quarter. For the residential property market, the number of transactions declined by 13% from the preceding quarter to 12,199. Overall flat prices recorded a 1% decline during the quarter.
Inbound tourism and private consumption will remain the major drivers of economic growth for the rest of the year. As transportation and handling capacity continue to recover, visitor arrivals should increase further. The improving economic situation and prospects should bode well for domestic demand, though tight financial conditions may impose constraints. Improved labor market conditions and the government's various measures to boost the momentum of the recovery will provide additional support to private consumption. Yet, the difficult global economic environment will continue to weigh on Hong Kong's exports of goods.
As a result, the government revised its economic growth forecast for 2023 as a whole to 4 to 5% from 3.5 to 5.5% in the May review. Consumer price inflation stayed moderate in overall terms in the second quarter. The underlying composite consumer price index rose by 1.7% year-on-year in the second quarter. Looking ahead, overall inflation should stay moderate in the near term. The forecast rates of underlying and headline consumer price inflation for 2023 are revised down to 2% and 2.4% respectively, from 2.5% and 2.9%.